Happy Wednesday, traders. This is Tanner with Charting Options. Today is January 5th. At least as of this video, it is the afternoon of what was a very bloody session in the market, particularly following the release of December's meeting minutes from the FOMC, the Fed meeting that occurred in December. The minutes themselves did not necessarily propose or introduce anything too different than I think was expected. Although they did make mention that, of course, Fed Chair Powell didn't quite allude to in his presser following the meetings themselves, that there could be a potential, and a lot of the chair itself thinks that there is a lot of signals that point to a quicker heightening of rates than initially expected. So in that release today with the minutes, the market did not like to read that. I'm assuming that, obviously this is me postulating um, what the rationale behind the sell-off was following the meeting. I am pretty certain that was it. There wasn't anything else that was really released that was too different than we generally assumed or knew based off of the words that came out following the meeting. But again, it seemed like the specific verbiage that were used in the minutes themselves were a bit more daunting than I think the market was prepared for. So in turn, obviously that caused quite a fade that turned into really a flush across the board. So we had 3 day trade ideas. That is what the intent of this video is. It is for me to recap the day trade ideas. They were fairly straightforward trades because, as I mentioned yesterday, because yesterday was similar, just not quite as harsh. When the market is or acts as a tailwind for us, whatever direction it is, whether it's to the upside or the downside. In the example, or in the case of yesterday and today, we're referring to the downside. It makes these trades much easier. As I mentioned in the initial post with the levels and the ideas themselves, always be cognizant of what the broader indexes are doing. Whether you specifically track the Qs, so the Nasdaq, or if you're tracking the S&P via the SPX or SPY, what have you, it is important to pay attention to those because sometimes they can certainly have implications on our trades against us, or in the case of today, really assist these big moves to the downside. So with that being said, as you can assume, Amazon triggered to the downside, but it was a very tricky trade. We'll talk about that. Mara, MARA, was our other ticker, or our other specific stock that triggered to the downside, provided the potential for a really good trade. And then SPY, which was our ETF of choice today, triggered to the downside and provided an incredible trade. Whether you traded Friday's expiration or if you were bold enough to trade today's expiration, regardless, you'll see that chart and see how really absurd the move to the downside was. So with that being said, we'll unpack the charts themselves. I haven't touched them up, so if they warrant any sort of marking up, I will do that with you guys. Right now I'm going to introduce session breaks on this 10-minute time frame. So each vertical line, you can see I'm hovering over the vertical lines. Each vertical line represents an entire day's worth of price action, so the totality of the entire session via each 10-minute candle. So this is the 10-minute time frame. Our levels are developed on the 10-minute, obviously, and as I continue to iterate, and I want to make sure I reiterate, I do not then sit on the 10-minute when in the position. I just use the 10-minute for confirmation to attempt to weed out any false moves by using lower time frame confirmation. But all that to say, that's about it. Green is our level to clear to the upside, red our level to clear to the downside, and then I include these black dashed lines with the price on the side to just hopefully provide you a guide for some levels to the upside and to the downside, assuming these trades trigger. Yeah, so without further ado, we'll talk about Amazon. We'll make this a bit bigger. You can see coming into the session, following yesterday, so on Monday, Amazon broke out of this really big triangle. So let me go to the 65 minutes so you can see how high of magnitude these trend lines are. So this upper trend line right here dates all the way back to the high from November. So November 21st, you can see on Monday, price cleared it. And then as you saw yesterday, or when I had this, here's the back to the 10-minute, price cleared it here on Monday, traded sideways into close. On Tuesday, yesterday, price attempted to move higher, was thwarted, and then failed the breakout. So this is what we consider a false breakout, and often provides a really good move to the downside. All those that got long for the move to the upside are now underwater, and now they're panicking. So they leave or they exit their position, which can trigger a sell, whether it be algorithm or from an algo based or from a market maker based. And then at that point, price flushed all the way down to the bottom trend line, bounced and held that bottom trend line that I have drawn here. So I just want to show you the magnitude of that trend line. All of this is relevant to the level that was established today, but you can see this trend line was used as support in December several times. It was used as support in October, and it goes way back all the way to the March 2021 low. So not the COVID low, but a year later, the low from that March low. So last March. And that was essentially our level to get below today. We wanted to see price get below yesterday's low, so we used yesterday's low as the actual level, but we knew that was going to be confluent with the breakdown of this triangle. And you can see right away this morning with Apple and with Microsoft, Amazon pulled back sharply. We have this really big wick. Let me see if I can make this a bit less cluttered here so you can see this a bit better. But you can see right here, this 10-minute candle, we have this really big wick that pushed price all the way to our 3292 target. I mean, almost 70 cents off. So that's a pretty good level there. And bounced. But in doing so, it triggered because it ended up closing below on the 10-minute that level to clear, which was yesterday's low right here, 33.26.99. From that point, obviously you get an alert in Discord. Price just traded sideways for quite a while. It formed what was a pretty tight triangle here intraday in a downtrend. So triangles in a downtrend are initially, or at least from a bias standpoint, deemed bearish. But obviously we let price tell us, and then you can see price fell out of the bottom of it, so confirming the bearish thesis. And then price attempted to get right back into that trend line from the bottom of that triangle. So this is why it's really important to maintain your trend lines even after prices maybe gotten below or gotten above, and you think maybe it's not relevant anymore. That's not always true. Oftentimes, and really in my experience, they have a funny way of becoming relevant again. And in this case, you can see price attempted to get back above and really just wicked at it several times and was unable to do so and faded into close. So as overall, this was a tough trade today because we got the 10-minute close below, we got a 10-minute close back above, so you could have either not wanted to put on a trade there, or that could have stopped you out of the position had you been really quick to put on a trade. Obviously from there, price just traded sideways and it never got into the bearish gap. So you can see here, I need to get a lot better at making this a lot quicker so you guys can just see this fastly. But you can see that there is a bearish gap now overhead that price was unable to fill. So we had a rejection point there and a huge nasty inverted hammer, what most consider to be a gravestone doji, that basically told you that it doesn't look like price is going to fill that gap. And as we know, unfilled gaps are indicators of where price is headed. So because this is an unfilled bearish gap, it is safe to assume that if price cannot get above and into it, it's going to go lower. And from there, you can see obviously it faded to the end of the day, giving you an opportunity to re-enter here at the end of the day. Had you either entered or not entered at all, based off of this price action, because it was really just a trigger to the downside on this huge long-legged wick, which really could have been a bullish signal. So I would have personally, and I didn't trade Amazon myself today, but I would have personally refrained from trading this or entering on the candle confirmation because of just quite how long that wick was. And then the attempt to get back above the trigger itself was successful. But then obviously you can see it did end up fading here at the end of the day. So there was a trade, albeit it was a lot trickier than the other two that I will show. And then especially when you factor in just how expensive premium is here. One thing I want to show, Now this is, oh, I didn't mean to do that, but that was the 15 minute, but I meant to show the 10 minute. But one thing I do want to show is whether you're trading on the 5 minute or the 10 minute initially, there are things you can look at like the 8 and the 21 EMA, and this is a really good example here. Four signals of taking a trade on or off, depending on if we're looking for it to act as resistance or support. But here on the 10 minute, you can see that the 21 EMA is this red line, but I'm going to make that green so it's a bit easier to see. You can see price did I not just make that green? Price never got back above it. After losing it here, we have a bearish cross. We have a bearish active sequence here on the 10 minute, and then price just whipped at it, and it was resisted by it. Even here, when on this really nice full body candle, it didn't close above the 21 EMA, and then it was rejected, pushed lower. Did try and get above it here at the end of the day, but now this is right at our trigger as well, so you have some confluent resistance here, and then obviously the rest is history with the market fade following the meeting minutes. So all in all, a very tricky trade here from Amazon today, all things considered. But the potential for a trade to the downside. Mara, a lot easier. I won't have to talk much about Mara. I do want to go to the 65 minutes so we can illustrate how important our level of the downside was today and the rationale behind putting Mara on the list. This is not a common ticker to have on the list, but we have trendline support dating back all the way here on the bottom left of your screen, December of 2020. Price respected it as support in July of 2021, so 6 months later. We have late December support right here at the trend line, and then we have early 2022, so Monday, it used it as support as well. So basically, our level to the downside was getting below yesterday's low, which was confluent. Let me make this bigger so we can see it, with losing the trend line. So yesterday's low was 32.64. It's this red line, and it was essentially confluent with losing the trend line. So assuming it did that, I just explained to you that this is over a year worth of trendline support. That is a high magnitude loss if price got below, and it did get below, and from there it faded. And it really, it created bear flags right at our levels. So I only included 3 levels to the downside today. Obviously, I should have included a lot more, but you can see price never really gave you a true reason to remove yourself from this position, and it gave you a retest and rejection. So here's 10-10. You get the alert in Discord. All right, 10-minute candle close below the level to clear to the downside for Mara. You pop on the chart, you see the next 10-minute candle. Maybe now you're looking at the 5-minute, right? You see the next 5-minute candle stayed inside and up, typical, and then the following 5-minute put in an inverted hammer on a retest of that 32.64. So price attempted to get back above that level and was unable to do so. And that was really your signal to take on a short position. So you put on this week's 32 puts. That's personally what I would have done because they're closest to the money. And you ride it out and see what it wants to do. And from there you see just a lot of bear flags and no reclaim of the 21 EMA in any way. So I had already illustrated this bear flag and breakdown. You had a bigger bear flag here that attempted to get above the 5-minute 21 EMA, but was rejected. So you can see how the 8 and the 21 EMA are so powerful, even on the 5-minute. They act, obviously, as you go down in time, the efficacy of these is less. So they don't work as great as they do on the daily, but they still work exceptionally well, and they can be great tools for gaining insight on when you should exit or when you should enter. However you're using them, whether you're using them as areas of support when price is in a bullish active sequence like the end of the day yesterday, or if you're using them as resistance like all of today, until really here at about 30 and a half, price tried to bounce. It tried to get back above both of them, and it tried to put in a bullish cross but was unable to do so. So if you had some tolerance today and allowed price to either choose to get into one, or you really held on and waited to see what was going to come of the meeting minutes, you would have been able to stay in this position and then reap the full benefit of the trade. But even from trigger at 32.50 to this low, which was really the trade in itself without any sort of bounce that you would have been concerned with, that was over a 2-point move. So that in itself would have been a really good trade, but had you stuck around for this remaining trade, you would have reaped a really, really big move. Um, though that would have been a bit trickier to do. So hopefully, if you did that, you had already scaled out quite a bit. You're already fully in profit. So anything you're holding then at that point are what you would consider to be runners, and the trade is completely risk free at that point. And you're just looking to see if price wants to push even lower, considering the magnitude of this breakdown. So to me now at this point, especially with the development with Bitcoin as all of this is transpiring, Mara likely is going to head a lot lower. I mean, this is a massive bearish igniting candle to the downside on the daily, which I have now shown. So this is the daily, below key trendline support. It's just a huge loss. And really, price carved through 30 support too. If you look left, 30 acted as support in September and in August. Now it's below it. So to me, this is going to visit 28.5 at least. It may want to come down to 26.5 over the coming sessions, and maybe even lower. But those are pretty much levels below 28.5 and then 26.5. Okay, let's go to SPY. Let's pop on the 10-minute. So SPY, very similar to Mara. Coming into the session, let me make this prominent. So this, I had left this dotted just for your eyes. Coming into the session, price has been range bound for the last, I don't know, 2 weeks, trading between 475 and really 479. Yesterday it gapped up, and the gap up was faded really hard. Price pulled back to the trend line from this bullish gap on the 23rd of December. So you see price used that as support on Monday twice, and then it used it as support yesterday as well to push price back up towards that 479 mark. So really what we wanted to see price do today was get below yesterday's low, but because we knew that that was also going to be confluent with losing the trend line. So really the big trade here was losing the trend line. So if you're aware of that, you saw my chart this morning and you realize, okay, so we're playing a trend line loss here, assuming price moves to the downside, you could have really entered prior to getting to this point of support. But had you not, and had you waited for a 10-minute candle close below, we got it shortly thereafter. At that point, price traded sideways, was rejected at the reclaim of the line itself, and then closed back below, and just a really harsh flush all the way to the lows below 468.50. So price filled partial. So this trend line from that I mentioned from December 23rd, price partially filled that there at the end of the day. And really this whole move came within the last 2 hours. So there was really no reason for you to waver. I put it on the 5-minute here, but had you taken the trade, whether it was at the alert or whether it was here on this next move itself, all of these are just dead cat bounces. So these are bear flags in a downtrend. So flags in a downtrend are bearish by bias until price tells us otherwise, and that is all these are. Unable to create new highs as price just continues to lose support. It attempts to catch itself, and so maybe some buyers come in, or the selling suppresses for the meantime, or in the meantime while price moves lower, but then eventually sellers gain control again, and price continues to move lower. So I know what you'll see in the percentage gain is different. It is based off of Friday's expiration, so 2 days till expiration, with today being Wednesday. But had you traded today's expiration, which is what is possible with ETFs, and why I strive to include at least SPY or the Qs in each of these, this was a 10x today. Had you traded today's 475 put on Discord alert of the trigger to the downside, over a 10x. They went from 53 cents to 670 at close. Now, obviously, that's assuming you played it perfectly. And to remind everybody, nobody plays these perfectly. Nobody is perfect in any way. But it's just something to show the potential gain in what could have occurred had you traded them perfectly, and how powerful these trendline breaks and flushes to the downside can be. It's always, and it never fails to amaze me how powerful the loss or reclaim or break above trend lines can be for price. I guess it just speaks to how algorithms are trained, right? They are trained to trade on trend lines. All right, guys, I hope this helped. I hope you had a great day, at least made the best of what was a really nasty day in the market. Thank you for watching. Thank you for your support.